Good morning. Welcome to Market Wake Up. My name's Jordan. This is John. It is Wednesday. It's the 16th of October today. We're just over halfway through the month. I hope you're all having a fantastic day. Potato, Muscade, Paul, everyone tuning in. If you are here, make sure you give us a wave. Say good day. Let's get into Market Wake Up. Good morning, John. How you doing?
I'm doing well, mate. I'm doing really well, actually. Saying that like I don't do well all the time. But no, I'm doing really well today. I took another trade, which is doing pretty well. Selling the Aussie dollar again, which has been very fruitful for me recently. The other interesting thing, obviously, there was some pound data, obviously, that's come out, which has actually really helped your pound CAD idea. I don't know if you've noticed, because I think you were talking about the potential that if CAD's data comes out a little bit better, we could see some downside in pound CAD, right? So CAD data yesterday was okay. Obviously, CPI did fall to minus 0.4%, which is not great because then they might have to cut interest rates more, but pound CAD did reverse from that because the other data was fairly solid. So that was a nice little call by you yesterday.
Thank you. Look, I said it was a bit of an interesting one. I shared an idea. I did some analysis. It is rare for those two events to land on the same day. That was CAD CPI and claimant count change out of the UK. And when you've got a seasonal pattern in and around 80%, even if it's on the same day, we already had half the data. We had the playbook. There wasn't much else we had to do. All we had to do is see if CPI came out strong or weak, buy or sell. Actually, I think it was a matter of sell or don't touch it. Like that very clear instructions. Right? Worked out really nicely. I am having a look at the chart right now. It's fell off a cliff. An hour ago, which we had CPI come in 1.7%. Wow.
Big drop there.
Down 2.2 into 1.7. Oofed.
Yeah. Now that's the catalyst that was needed to give that pound a little poke over the edge,
and here come the rate cuts.
Yeah, well, this is what we were saying. For me, pound was still a sort of stronger currency, and yesterday we did talk about the idea that the CPI could be the point where it does start to wane a little bit. I think we also have some other data coming up towards the end of the week for the UK as well. Yeah, we've got retail sales data coming out as well towards the end of the week, but not really focused too much on that. The inflation picture in the UK is looking pretty good for cuts now, which a lot of people will be happy about in the UK if they're trying to remortgage or move home. In the UK, you have you can fix for 3 to 5 years, I think it is, before you remortgage. So those that have kind of fixed for a higher interest rate might consider changing that up a little bit. So that's interesting to see. But yeah, core CPI actually fell to 3.2%. So core CPI really is still fairly up there, right? Pre-pandemic levels, you're looking at sort of 2%, 1.9%. So I think the highest it got to in 2017 was 2.8%. So core CPI is still a bit higher, but it did come in beating those expectations. It was meant to be 3.4%, came at 3.2%. So that did also come in a lot lower as well.
Yeah, I'm just having a quick look at what we're kind of seeing on the bonds front in the UK. Just getting an idea of where we're at. I was going to say US 2-year bonds. Sorry, I am a little distracted because obviously that was a weak number that's printed. The bonds are reacting as they should. Let me go ahead and bring it up here for you. This is a 1-hour chart on the bond yields, the 2-year Great British Pound bond yields. Now, for some reason, the interest rate overlay is not working for me. But as you can see right now, they're dropping off a cliff, which means they are forecasting, or there we go. There's the interest rate. It is forecasting for us to head lower, as we said. So the reason I was just singing there going, rate cuts, woo, rate cuts, is because bond yields are saying rate cuts. CPI coming in at 1.7 is a shock. Now, forecasted 1.9, so we're expected obviously to get rid of a stronger month and reset it. 2% has been the target for every central bank in the world. Smash it out of the park. 1.7. This is the fun part, because when you're declining 0.5% in one go, looking at CPI alone, right? We're not looking at core, we're looking at CPI. When you decline 0.5% in 1 month, this is where the Bank of England go, oh shit, is that going to happen next month? And is that going to happen the month after? Because all of a sudden in 3 months' time, we're in deflation. And that's a problem. We don't want deflation. And that's what the bond markets are doing to react. So you can see here on the screen the 2-year government bonds, which are very, very reactive to data, right? They're the first to go. The first incentive on what this means is towards rate cuts, priced in at 4.03% right now. And as we know, I'm pretty sure the interest rates are at 4.75. Correct me if I'm wrong there, John, but I think it's 4.75 that the Bank of England are at.
Yeah, I think you're correct on that. Let me just double check that for you, but I'm pretty sure we are at 4.75%. No, we're at 5%.
You're at 5%. Wow. Okay, so you've got a percent differential between what the 2-year yields are.
Yeah. You've got it on your screen there, Jules.
John. I'm not looking for judgment here. Right, I know. Right, this is what we call experience. Okay, I know that trading views economic indicators take a little while to catch up. Yeah. They take a little while to catch up, right? So I'm just double checking before I say, hey, it's 5% that we are priced in. And if you have a look at here, I mean, it does say it's priced in. Leave me alone. Look, you don't want the differential between these two lines on the chart. These two lines on the chart, you want them as close together as possible. When they do go whoop, that usually means the bond market's pricing in a difference for the interest rates, which means the interest rates usually follow what the bond market. As you can see by this chart alone, you don't need a genius to tell you the blue line goes first.
Yeah.
The blue line goes first every time. The blue line goes, the red line follows. The blue line goes, the red line follows. The blue line's gone. Red line's now following. And something like this, a short reaction 1 hour on the 1 hour chart is pointing towards down move. So we might see that continue. To have a look at actually how the Great British Pound's reacting from this was quite weak. I was just having a look on the intraday chart there. Great British Pound CAD moved more, but you can see the negative reaction in the pound here, this quite large sell-off. It wasn't expected. 1.7 wasn't expected.
1.7 wasn't expected, right? Yeah, I get that. Yeah, I get that.
The downfall was expected.
The downfall was expected.
I
think pound had, well, a lot of charts this year have had real out of sync years, right? To what's typically known in the sort of seasonal world, right? Which is obviously very interesting to us. But essentially, what was happening was the idea that the UK was going to keep those rates high for longer because you've got the good growth, the unemployment rate wasn't too bad, X, Y, and Z. But CPI is the main catalyst to what the central bank's going to be looking at the moment. They did leave it higher because they were at 1.9% prior to this. Oh no, they're at 2.2%. Sorry, so they were above the 2% target threshold. You know, it was very similar to what we were talking about in the US, where we said when that I think it was 2.3% or 2.9% at the time, I said was like that's the catalyst. I think if that starts to break, then everything's going to start to break. Very similar in the UK now, isn't it? We started to see that 1.7% in CPI. But what has changed a lot as well recently is oil pricing. Oil pricing has changed dramatically, right? We've seen a complete turnaround in oil prices, largely down to the fact that Israel have said they're not going to be targeting oil refineries. They're going to be targeting military sort of areas instead within Iran if they were to retaliate to Iran. So that is also an interesting concept.
Do we believe them?
No, obviously not.
Because if you're going to bomb an enemy, you're not publicly going to go, hey, don't worry, we won't hit this part that's crucial to your economy. No, we'll just hit over here. But make sure you move everything from over here and don't protect those because we won't hit those.
I don't think it's a reasonable thing to price in, right? Put it that way. But obviously, those oil prices are going to impact inflation, and inflation CPI is a lagging indicator, and you can see how the market has moved recently, right? We have seen some big downturns in oil prices. So, yeah, for me, it was expected to see lower CPIs across the board, lower inflation rates across the board because of what's going on in the oil market. It'll be interesting to see if we do start to see, if we do see any kind of retaliation from Israel. How does the market call the bluff essentially, and does it start to price in those kind of moves? And I think that's going to weigh heavy on what goes on in the future. But right now, I mean, central banks are looking pretty good to start cutting, and it's going to make people happier, right? And that's a big thing, isn't it?
Well, to add to that, the FTSE likes it. I can give you that for free. The FTSE really likes it.
Yeah.
So stocks like it in the UK. Investors like it in the UK. They're going risk on. They're buying up with such a CPI release, which is, I guess it's just it's interesting. It's really interesting to me. Nevertheless, let's move from market leftovers and throw my pen across the room and have a look at what we have coming up today. Nothing.
No point.
But we do tomorrow morning before we're live again of arguably the most important thing you're ever going to see, John. The greatest country on earth.
Is this some Australian data, is it?
Unemployment rate for Australia happens to be released tomorrow, and I think everyone needs to be. No, to be fair, you need to listen to this because you have been trading the Aussie dollar.
I have been trading the Aussie dollar.
Yeah, you laugh at me. I was chatting to another John today, and he was asking questions about Australia. And he's like, I've never really researched it, and I was always like, that's such an insult. Like, how dare you? You're a trader and you've not researched one of the biggest commodity producing countries in the world. I was like, what do you do?
That's what you get when you go and speak to other Johns. Do you know what I mean? What do you do? Cheating on me?
Yeah, sorry, John. Had a John with an H. But no, I was having a fun stat I actually seen. There is only 6 million more people in Australia than the amount of people that live in the state of New York.
Wow.
The landmass of Australia, right? You can't even see my hands because it's all this. And then New York State in comparison is probably about this. New York State, I think, is 21 million people. Australia have about 27 million people as a whole.
Yeah, I was going to say, I saw something as well. Some guy basically took the state of California, put it into Australia, and it was like the amount of people in California is the same amount of people in Australia. And it was it was wild to me because it only kind of filled up a tiny piece of Australia.
It's the same with the UK. I mean, you pick up England and England's population and you put it in Australia, it's tiny. Yeah, the population is just ridiculous.
Yeah, absolutely. But anyway, you're talking about the employment rate though, and the employment change is meant to come in a little bit, isn't it? It's meant to drop from 47.5 25.2s, which is quite interesting. You've talked a lot about recently about potential layoffs in mining sectors and things. No.
Happened,
right? So, do you think this is going to flow through into this as well?
So, yes. Long story short, yes. So these layoffs have been rather recent. So I'm not sure how well they'll come in. I'll be interested to see revisions. Right? I almost want to see. So this is going to be last month's numbers and I don't know if it's going to be impacted in there. We are expected to slow down, so that might have that. But I'm also really keen to see revisions on jobs numbers, like especially when we're looking at the actual number change, not the percentage. So I wouldn't say, yeah, we're going to come in. We are forecasted to come in lower, right? A lot lower than what we have been printing, but that's fine. And I stick by that. One thing I've found super interesting is the China situation. Where, you know, obviously a couple of weeks ago they shot a bazooka and said, hey, we're gonna bring in a load of stimulus and prop up the market. A lot of people went okay and propped up the market, and we've seen the way the stock market gone. And then they didn't actually tell anyone what the stimulus was that they were delivering. They just hinted, hey, we're gonna stimulate the economy, and everyone went and bought it. And then when they actually saw the plans for the stimulus, everyone went, what the hell?
Yeah.
Like, what is this? Like, that's horrible. Just for reference, before this deleveraging of the housing market in China, Chinese housing and real estate market was the single biggest asset in the world. Bigger than the US housing market. Like their real estate market was the single big. Now it helps when the leverage that they were able to get hands on was that, and that really helped. They lost $10 trillion in 1 week of value on those assets. 10 trillion, right? The stimulus package they offered was 2 billion won.
Yeah, and
I don't know about maths, John, but this don't add up.
That math ain't nothing.
That math ain't nothing. So essentially, what I found really interesting, I'll get back to why this matters to the Aussie dollar, but what I found really interesting is the government now in China have arranged to do a press conference, which is very, very similar to what the ECB do and what the Fed do. Like what Western countries, this is very rare for China to do this. A press conference where they are going to try and control outside sentiment on their stock market, which sounds like they're meddling, but that's what we do. It's what Western countries do. That's why we have press conferences, right? Yeah. But they're adapting that, and I found that really interesting. That shows the impact of international investment. However, unless they give something massive,
incredible.
I mean, still in a problem, and that's probably why you're seeing the weakness in the Aussie dollar. If we get weak jobs data on top of that, plus China, biggest trade producer, all our ores go to China. If they're not buying, we're not selling. We don't have jobs. Jobs come down. If all of that is coinciding, Aussie dollar.
Yeah, I agree. I think Aussie is, you know, like I've been saying anyway, hedge funds are selling. Well, they're not selling aggressively. They were buying aggressively of the Australian dollar, but I think it was in anticipation of what was going on in China. China come out, drop the stimulus, and then it just drops like a stone. And that actually kind of leads me into a little bit of a segue into the big bite, if you want to get into it, George.
I want to get into it. Let's do it. Ready?
Yeah, we're ready. We're there. Get the music changed up. We're there.
Come on.
So, RS, by the way, I will come back to your question on Take It to Go. But the big bite today, I'm talking about Mexico, right? I love Mexico. I've never actually been to Mexico, right? But I love Mexican culture, essentially. I like the beer. Yeah. I like the food.
Okay, what beer?
Well, I might butcher this now, but I like a Corona, you know?
Okay.
I like a Corona, a bit of a lime in there, you know. I want to say this might be completely butchering this, but you know the cocktail, a margarita, is that?
It's definitely South American. I want to say it's South American. I don't know if it's Mexican.
Yeah, let's just leave it at that. But I love those.
I think that's a smart decision. Two white guys sitting here trying to attack culture. I don't think this is going to go down well.
Yeah, it's not going to go very well at all. But yeah, essentially, I'm looking towards Mexico now, and the bigger picture is because of the US elections, right? We've got the US elections coming up, and I was looking at what markets are going to be impacted. Yeah, tequila, baby. That's what I'm talking about.
To be honest, I can't do tequila though. I really can't.
No, it makes me up. But anyway, looking at the US dollar pace at the moment, I'm just going to bring my screen on board.
We'll come to that in a second. It's just been popped up. Let's get through your big bite. But we'll address the poll in a second.
Yeah. So basically, Trump did an interview yesterday. I don't know if you saw it on Bloomberg, but he did an interview, right? Now, Trump is leading in the polls at the moment, according to sort of betting websites and things like that, right?
Leading indicator.
Yeah, so that is interesting because I was looking at, okay, what if a Trump victory happens again? What are markets are going to be? And we talk about the Trump trade all the time and things like that. Now, in his comments yesterday to Bloomberg, right, his comments was, first of all, he said the most beautiful word in the dictionary is tariffs. For one, right? Which I thought was funny because he was about tariffs last time and he did impose a lot of tariffs last time.
He likes, which will prop up CPI, but another.
Yeah,
sure,
I think Trump is very inflationary for one, but two, he said I haven't even started with tariffs yet in my first term. So that's just giving you an insight of what he's going to do, right? Then he said Mexico auto plants will be the end of Michigan. Now, Trump is about deglobalization, right? Trump's is all about make America great again, right? Bringing everything back into America. So he's going to try and do things that are going to put pressure on other sort of economies and tariffs, for instance, to basically try and push them out the way a little bit so people buy America. Now, he also said our country is being threatened by Mexico. Now, these are just, to me, this was quite outstanding because Mexico have actually gone through a pretty big change recently. They've gone through a new presidency. It's the first female president they've ever had as well. I think 2 of the candidates were actually female as well that got through to the end, which I thought was very interesting over there. They're obviously, they're changing what's going on. But I'm going to show you a few things, right? So the first thing is when Trump was in power the first time, right? So if we go to November 2016, right, which is when Trump came into power, which is this massive candlestick here. This is a daily chart, by the way. And if I just move that white line out the way, this was when Trump won the election, right? So obviously you had that price in there of what they thought would happen with Trump towards Mexico, right? Now, over that period, you can actually see it was fairly flat throughout his presidency, right, between sort of Mexico and the US dollar. However, you can see that the market was favoring sort of longs, really. There was large sort of rallies, even though we did see some pullbacks in those rallies. The market was trying to, when it had an opportunity to anyway, was buying US dollars against the peso. Obviously, this rally here is a little bit of an outlier. That is COVID. So obviously, a lot of the market was pricing in US dollars in that point of time. Now, this is the Biden administration, right? So from 2020, November 2020, which is this large bearish candle here, this has been the Biden administration, right? So the peso has actually appreciated against the dollar by 21%, which I found fascinating as well. So obviously the peso is going to be on a bit of a knife edge here for me. If Trump gets in, I think, and he imposes the tariffs that he wants to impose, then we could start to see hedge funds and things like that trying to price in the dollar peso upside. I think if Harris gets in, then I think there could be a little bit more weight to potentially seeing some further downside in this market. Now, the dollar peso was actually a very good carry trade at one point, right? Because the peso's interest rates are at like record levels. I think it's like 11.5% or something like that. And then you've got the US dollar coming down in rates. So it doesn't necessarily make sense to be long dollar peso at the moment for me. But this has been generated by the presidency in Mexico. They changed president. The president was all about increasing government spending, giving back to poorer people, basically giving out benefits, X, Y, and Z. And hedge funds actually changed their position. So there was a commitment of trade, a report signal down here to get long dollar peso and short basically pesos because they basically got out because the switch from governments was less focused on business, right? It was more focused on government spending, things like that. So it was very interesting to see that dynamic play out. So I'm thinking in my head, if hedge funds are starting to sell peso and then we get a Trump administration, is the peso going to be a market that's going to come under some extreme pressure? And are we going to see some very aggressive moves higher? As a trader, putting my trading cap on, this makes it quite difficult to be a trader of the peso long term. But from short term moves, it might be okay. And the only reason being is because of those swap charges. Those swap charges would be incredibly painful if you go long this market. I actually used to love trading dollar peso as a strategy. On a Wednesday, I would short dollar peso, get the swap charges, close the position. That was a position that I used to play quite often in the market. And I don't do it.
Risk a lot to earn a little.
Yeah. So that's why it was a very short-lived strategy.
I think I would recommend it.
It was a very short-lived strategy, but it was okay. It was okay. Any gains are gain in my eyes. So yeah, but just thought I'd bring that to light because we are coming into election. So I do want to bring some theories around that. Now, I was looking at sort of, you might be thinking, well, why is this going to impact Mexico that much? If I just bring over the some of the Mexican indicators right now, and actually, if we just quickly go into Mexico exports, right, and we have a little look. Let me just click over onto here first, and we'll go by country. Yeah, they do a hell of a lot of business with the United States.
There's your trade partner.
So my theory with this essentially is if we get the Harris administration in, or we stick to the same administration, I think actually there might be a little bit of pressure off in that sense. And I think there might be some good plays to the downside on dollar peso. However, I think if Trump gets in, it's one to avoid for me.
I like it. It's and I mean that election's a flip of the coin, right? Some betting markets saying Trump's in the lead, some betting markets saying Harris is in the lead, and then other economists living on a blue moon. It's a tough one to call at the moment, but overall, that's a good big bite. That's a thought. That's a thinker. That's a thinker. That is a thinker. I quite enjoy that one. Yeah. I'm a little bit distracted by mojitos and tequila, but I am quite fond of that. I wanted to actually touch on that. We did do a poll in today's chat. All right, so let's get into take it to go. Let's take our shoes off. Let's relax a little bit. Let's get back into home comforts. We did do a little poll. Gil's popped in and gave us the update. What would you rather do? What would you do with $10,000 right now? Would you invest in stocks or crypto, travel or take a vacation, start or expand a business, or if you're not sure? These questions were not answers I was expecting. Let's just say when I was thinking about what I would do with 10K, I was thinking about how I'd position my portfolio. But nevertheless, John, let me throw it your way. If I gave you 10 grand right now, what would you do?
Going on holiday.
You're going on holiday. You've been on holiday 7 times in the past 3 weeks. How could you possibly go on any more holidays?
No. I think the reason why I'm saying that is because of the uncertainty in the market, right? I think I would rather be. Do you know what? I think if someone gave me 10K now, I think I'd rather be cash right now. I think I would rather be cash.
Pound?
Just going into this election, right?
Pound?
Say again.
In pound?
Yeah, I don't mind it in pound. I'll have it in pounds. Pounds is stronger than most economies at the moment. RS makes a good point. Stronger than the euro right now. Euros in the bin. But for me, I think I would be cash right now. Just because of my thoughts on what's going on in the outer economy, and plus, I think the election is actually going to have a bigger weight on the market than what is being priced in right now. So for me, I would be cash at the moment. I don't know if you feel, or you could obviously partly go into some kind of defensive ETFs and stuff, that usually do okay anyway.
I'd slap it straight in the market wake up marketing and put us on the map.
Yeah. I like that. Who's got 10 grand then?
Yeah. Let's slap it in the market, wake up and make sure we're there. Yeah. RS has chucked in saying Great British Pound, Swiss franc. Swiss franc don't want to touch. Euro want to short. Pound unsure. Now we've had 1.7. I think it's an interesting one. I do think we'll see a little bit of weakness in the pound itself, not in the economy, but in the pound itself. I do think we'll find some sustained weakness in Great British Pound, Swiss franc. So let me bring that up. The euro definitely still on the ball for shorting. Swiss franc, That's a tough one. I still stand by that decision of I think we're pincering.
Yeah, I mean, if you
we're coming into a funnel like this, and eventually they're going to intervene.
Yeah, I mean, we had the cut signal short, which played out really nicely. But at the moment, like we're coming into areas of demand now, so it's like, you know, we're going to take some profits at some point off the table. I think for me, pound Swissy was a good long idea early this week, end of last week. But I would not have been long going into this CPI data. Absolutely not. Because
I mean, it's not really doing much anyway. I mean, you have a look at the chart, we're just kind of sitting around in here. And I think that pretty much sums up how we feel about both these currencies.
Yeah.
A little bit unsure. And I feel gratification that I am a little bit unsure, because look at that. That tells you that the market's just a little bit unsure. So, I think the market's telling us all the information we need on Great British Pound Swiss franc.
Yeah, I think they're better markets to go and trade at the moment. You know, short Aussie.
Agreed.
No, that's just what I'm doing. Sorry, that's just what I'm doing.
Guys, we'll be back tomorrow to do it all again, 8:30 a.m. British Standard Time. Make sure you hit the like button. Leave us a comment if you have a question for us. We do like going back through. And we've got a new little welcome video on the channel. Go check it out. Click Market Wake Up below. Have a look at our most recent, our only video. Have a look into it, because we spent a bit of time on it, and I think you're going to enjoy it. Without further ado, we'll see you tomorrow. Cheers, John.
Cheers.